Mastering Wealth Creation, Understanding Systematic Investment Plans, SIPs, for Financial Growth. Welcome to our comprehensive guide on systematic investment plans, an effective wealth building tool for individuals seeking long-term financial growth. In this video, we will delve into the intricacies of systematic investment plans, exploring their benefits, working principles, and how they can pave the way for a secure financial future. Systematic investment plans are a popular investment method that allows individuals to invest in mutual funds in a systematic and disciplined manner. With systematic investment plans, investors can regularly invest a fixed amount at predetermined intervals, such as monthly or quarterly. This disciplined approach helps inculcate a savings habit and makes the investment process more convenient for beginners. Let's say you decide to invest 10,000 rupees every month in a mutual fund through SIP. Regardless of market fluctuations, you'll buy more units when the prices are low and fewer units when the prices are high. Over time, this can help average out the purchase cost, potentially leading to better returns compared to investing a lump sum at one go. Systematic investment plans offer a range of benefits that make them a popular and effective investment option for individuals looking to build wealth over the long term. Some key advantages of systematic investment plans include: disciplined investing. Systematic investment plans promote a disciplined approach to investing by encouraging individuals to invest a fixed amount at regular intervals. This instills a habit of consistent saving and investment, preventing impulsive decision-making during market fluctuations. Rupee cost averaging. Systematic investment plans leverage the concept of rupee cost averaging, allowing investors to purchase more units when prices are low and fewer units when prices are high. This strategy helps mitigate the impact of market volatility, potentially leading to better returns over the long term. Flexibility. Systematic investment plans offer investors the flexibility to start with a nominal amount, making it accessible for individuals with varying financial capacities. Additionally, they allow investors to increase or decrease the investment amount as per their financial capabilities and goals. Power of compounding. SIPs harness the power of compounding, wherein the returns generated on investments are reinvested to generate further returns. Over an extended investment horizon, compounding can significantly amplify wealth accumulation, making systematic investment plans a potent tool for long-term wealth creation. Diversification. SIPs provide access to a diversified portfolio of securities, including equity, debt, and hybrid funds, thereby spreading the investment risk across various asset classes. This diversification helps investors manage risk more effectively compared to investing in a single asset class. Professional fund management. SIPs are managed by experienced and skilled fund managers who conduct in-depth research and analysis to make informed investment decisions. This professional oversight can potentially lead to better returns and risk management compared to individual investors managing their portfolios. Goal-based investing. SIPs enable investors to align their investments with specific financial goals, such as retirement planning, education funds, or buying a house. By customizing systematic investment plans to meet these objectives, investors can create a structured and systematic approach to achieving their long-term financial aspirations. Affordable entry point. Systematic investment plans offer a low entry point for retail investors, making them accessible to individuals with limited initial capital. This affordability allows a broader section of the population to participate in wealth creation, fostering a culture of inclusive and participatory investing. By leveraging these benefits, investors can leverage systematic investment plans as a powerful tool to build wealth steadily and achieve their long-term financial objectives.